The coronavirus pandemic, COVID-19, has unfolded a remarkable level of uncertainty in global economy. Like any previous episode of economic slowdown, the most immediate fallout of this pandemic is also on financial sector. A financial sector is known as the backbone of an economy, and hence it is necessary to keep it in its best of respect. The pandemic has emerged as a black swan event, and it is demanding various extraordinary measures not only from government across the world but from various players like corporate houses, banking, financial institutions, etc. And today, we are glad that we all have assembled here to discuss and deliberate on these issues. Amongst us, we have galaxy of experts from different area of financial sector. We are fortunate to have with us Sri Shalil Mishra, CEO, Reliance Retail Broking Limited, Sri Rajiv Shekhar Sahu, Financial Consultant and Principal Partner SRB, Dr. Shanmugam, former Head Research and Index Administration, and Sri Thomas Matthews, Financial Consultant and Managing Director, Odisha Capital Market and Enterprise. Good morning to one and all. I, Neha Joshi, Assistant Professor, Birla School of Commerce, Birla Global University, extend a very warm welcome to all our esteemed panel members and participants of today's webinar on strategic issues in Indian financial sector during current economic crisis. I would also welcome our very own Dean, Professor Dr. Samson Maharana, who is the mentor and chair of the webinar. Welcome, sir. Before we move forward, I would like to take the opportunity to introduce our esteemed panel members. We have with us Sri Salil Mishra. Sir is currently Chief Executive Officer at Reliance Retail Insurance Broking Limited. He is an alumnus of IIM Calcutta and a qualified member of both Institute of Company Secretaries of India and Institute of Chartered Accountants of India. Sri Mishra holds a master's in business finance from ICAI Delhi. He has more than 25 years of experience working in senior executive cadre in large consultancy and manufacturing companies like PwC, Hindustan Limited, Petroleum Limited, etc. Sri Mishra has been successfully looking after the expansion and growth strategy of Reliance Group of Insurance since 2006. Welcome to the session, sir. Our second panelist for the day is Sri Rajiv Shekhar Sahu. He is a financial consultant and principal partner in SRB Associate, the leading chartered accounting firm in Bhubaneswar. Sir has been holding key managerial position in many PSUs like NTPC Limited, Hindustan Zinc Limited, and Tehri Hydro Development Corporation India Limited. He was also the chairman of Audit Committee and director of Bank of Baroda. Earlier, he was also chairman of Audit Committee and member of Risk Committee in Andhra Bank. He has also functioned as chairman of Indo-American Chamber of Commerce. Welcome, sir. I hope that your association with various banks will bring in a lot of practical insight in today's discussion. We have with us Sri Thomas Matthew, who is a qualified cost accountant, financial planner, and an active investor in capital markets. Sir has rich industrial experience of 12 years and has served as director and CEO of Bhubaneswar Stock Exchange. He has been associated to many educational institutions for past 15 years, imparting knowledge to young minds in the domain of finance. Welcome, sir, to today's webinar.
Thank you for inviting me.
We have the fortune to have with us Dr. V. Shanmugam. He is former head research and index administration, multi-commodity exchange of India Limited, Mumbai. He holds a doctoral degree from Delhi University and also is a gold medalist in MSc. Sir is not only considered as a renowned expert in commodity derivative market in country, but has also played a proactive role in creating awareness about commodity exchange in the country among students, scholars, and practitioners. He also chairs when various as an expert member in various board of studies committee of various industry institutions and university in the country. Welcome, sir, to today's session. And it is indeed a pleasure to have you all on board with us today. Lastly, I would like to greet and introduce our very own Dean, Birla School of Commerce, Professor Dr. Samson Maharana, who is a constant source of encouragement and truly the pillars of our school. Sir has more than 37 years of teaching experience in accounting and finance in the Department of Commerce, Utkal University. He has done his FDP from prestigious IIM Ahmedabad and is former member of 5th State Finance Commission, Government of Orissa. Professor Maharana is also independent director in various public sector enterprise in the state. Welcome, sir. With this, I once again welcome all our participants to today's webinar, and moving ahead, I would request our Dean, Professor Samson Maharana, to deliver his welcome address. Sir, please.
Thank you, Professor Neha Joshi. Good morning to all the esteemed member of the panel and all the participants to the third webinar being organized by the Birla School of Commerce. Prior to this particular webinar, we had also organized two other webinars. One was on career opportunities in commerce, and the second one was governance challenges during COVID-19. Both were very highly successful with more than 1,000 participants. And I'm very happy to inform all of you that this particular webinar has got overwhelming response from cross section of the society. Nearly 2,000 participants have registered. This particular webinar is being organized, as Neha has said, in the backdrop of the COVID-19, the crisis which has devastated the economy of most of the countries of the world, including India. And in India, as you know, it has already taken away the jobs of more than 122 million Indians. Individual, institutions, society, market, government, all of them have been affected by this COVID crisis. While announcing this economic stimulus package of more than 20 lakh crore, our Honorable Prime Minister and Honorable Finance Minister, they emphasized on one point among different pillars. They said that we need to have a strong and healthy financial system. Against this particular background, today we will be discussing the various strategic issues associated with Indian financial sector. It is no doubt that financial sector channelize the savings from the surplus unit to the deficit. The channelization process has to be very efficient. The funds should flow to all the sectors in a cost-effective manner, low cost, adequate quantity with liberal terms and conditions. If there is any problem at any particular point, that will lead to a lower growth rate of that particular sector, and the economy will not be sustainable. Whenever we are discussing anything about the financial system, we have to include all the stakeholders: government, corporate, financial institutions, rating agencies, regulatory agencies, individuals, FIs, everybody. But because of the time constraint, today we'll be confining to our discussion only the four important segments: the corporate, the commercial banking, the mutual fund and stock exchange, and then risk management, hedging instruments available in India. Coming back to the corporate, one of the major stakeholders in the financial system, both because they mobilize resources from the financial market and they also invest their surplus money in the financial market. When you look at the financial position of the corporate in the backdrop of the economy, we see that during the last 3 years, the economy is passing through a crisis phase, and it has further aggravated due to this COVID. Many of the companies, they have problems of high leverage. They are not able to service their debt obligation, and they are burdened with this, and they are trying to get rid of that. They are not able to do that. Banks are not willing to give them loan because the market is going down and down. And when you look at some of the large corporate, probably who have strong cash flow position, they are doing well. They have been suing right shares. They have been selling their stake to FIs and trying to liquidate their debt capital and also off balance sheet liabilities. Some of them trying to strengthen their balance sheet so that their credit standing in the market will go. But on the whole, we find that corporate, basically the mid cap and others, they are having very serious problem during this crisis phase. Next is commercial banks. Commercial banks were doing very good during the last 2-3 years. They have been able to reduce their NPA burden as a result of a lot of restrictions put in by the government. But all of a sudden, the COVID crisis came, and they are expecting that the delinquency level will go up, and which will have an impact on the capital adequacy ratio. And they may have to raise more capital, or they may need more bailout support from the government. Both are not possible during this particular phase. Companies do have a problem, of course. They are expecting that because of this moratorium in the debt payment, maybe suspension of the IPC proceeding for a year, their NPA level may go. But one important thing is that in spite of the crisis, there is an opportunity. The digital transactions have gone up very significantly, and the banks are going to capitalize on that. Banks are government owned. They have a problem of governance. But in spite of that, in India, commercial banks are doing fine. And some of them are saying that we can have a bad bank concept to take over any type of bad loans. If you have more, which was successful in USA, we do not know. Time will tell. These things today we are going to discuss. And the next one is the stock market. Stock market is dancing in India. Sometimes going down, sometimes going up. When the government announced the economic package, stimulus package, and maybe there are a lot of reforms in the agriculture sector, labor sector. Stock market started responding positively. But whenever there's a crisis, both in India and outside, fundamentals have not improved for many of the companies. Stock market is going down. People are advised that don't go to the stock market during the volatile period. This is something which we are going to discuss today. In mutual fund, I must say that it is the most popular destination for common investors. But during the last few months, we know that there is a liquidity crisis because of the problem with the Franklin Templeton. Uh, of course, in the later stage, the situation is improving, but I must say that the confidence is still lacking. Common people, they do not want to go to the mutual fund. We'll have to discuss that issue. In India, the financial literacy level is not very high. Many of the investors, they do not know how to hedge their risk, investment risk. This is one area, gray area of the Indian financial market. It's very important that investors should be aware of what are the risk management, risk hedging instruments available. How can they hedge their risk? These are the few things I just wanted to share with you. And against this background, today we'll have a lot of discussion, deliberation by our esteemed experts who are expert in their own line. I'm sure that this discussion will be really educative to all of us, and it will be really productive, and we can learn a lot of things out of today's webinar. Thank you very much.
Thank you, sir. It is indeed in order to revive our economy and to resume economic stability, we need all the stakeholders of financial sector to step up and do their work. Thank you, sir, for initiating today's deliberation with such insightful and intriguing observation about issues that our financial system is presently dealing with. Now taking the discussion forward, I would request Sri Salil Mishra, who is one of the key executives in Reliance Group, to highlight the issues that is faced in the world of corporate finance. Sir, we all know that corporates are the major stakeholder in a financial sector, both as a mobilizer of resources as well as investor of funds. As a CEO of a large corporate, how do you visualize the major issues that are being faced by the corporates in investing as well as in financing functions in the present period of economic crisis?
Good morning, everyone. It's my pleasure and privilege to be a part of this panelist, eminent panelist. Thanks, Mr. Professor Maharan, for giving me this opportunity to speak on this occasion. Yeah, definitely this situation is pandemic and it's very easy to describe than handle. Handling this situation is a nightmare because the corporates are facing a lot of difficulties in handling the scenarios. There are issues, lot more issues. It is across the world, every company is facing these issues. Currently, entire country is under lockdown. The top line is not improving. It is going down day by day. Bottom line is poor. Financing is not happening. Banks are not financing the small or medium sector companies because NPAs are ballooning. There are issues in the banks. Around 36 trillion stays asset in the banking sector now as on day. Almost 35% of the advances what banks have given to the corporates. Companies are not getting the funds from the bank. That is one of the major issues. And many companies, those companies who are not technologically advanced, they are also facing difficulties in this scenario while managing their source or managing their staffs across the globe. Many companies, they have not done the digitization or technological advancement, or they are facing the issues for managing their employees across the country. So in this scenario, what the corporate actually exactly they are supposed to do? Because when your top line is not improving and your cash flow issues are coming, then one of the major challenges in the corporate sector how to manage their cash flows.
କହିଲି ସେ କହିଲେ ଦରକାର ନାହିଁ ପ୍ୟାନେଲିଷ୍ଟ ମାନଙ୍କୁ କରିବା ପାଇଁ ମୁଁ କହିଲି ସେ କହିଲେ ପ୍ୟାନେଲିଷ୍ଟ ମାନଙ୍କୁ ଦରକାର ନାହିଁ କରିବା
Continue.
To manage the cash flows.
Sorry for the disturbance.
Yeah, to manage the cash flow. So what exactly, currently what we are doing in our company, basically this accounts payable management, which was always on the last leg of any working capital management, that is being monitored very closely. When you cannot increase your top line, you need to see how you can cut your expenditures. So that is one of the major objective for any corporate sector now. So you must have seen the newspaper, most of the companies have reduced the employee cost by 20%, 30% across the globe. Many companies, they are not paying to the employees now, or they are paying reduced manner. And many companies also terminate the employment wherever it is not required. So this is, in fact, there is a unemployment growth in the country because of that reason. One of the reasons actually, when the supply is not improving, then you need to cut down your expenses. For cutting down the expenses, one is your employee expenses is one of the factors which you need to do. What we have done in case of Reliance, also in case of many rented properties, we have combined 2-3 properties and started operation from one property, so that at least rental expenses can come down. So these are the various measures we have taken in our company to reduce the cost. That is one of the major challenges. Second one, what we have done basically to manage this uncertainty. Earlier, whatever we have done for the long-term planning purpose, the long-term planning has gone for a toss. It is now a scenario-based planning. Every day, every moment, financial planning we are doing on an everyday basis and monitoring the scenario on day-to-day basis. It is now becoming day-to-day management rather than a long-term management or a quarterly or the quarterly cash flow concept has gone now. Quarterly, we are now focusing on the weekly cash flow and daily cash flows, where we can get the money, how much expenses can be reduced, how much expenses, how much vendor payments can be delayed. Wherever we have to talk to the vendor, we are talking to them, and we are reducing the payment and or delaying the payment so that at least the current cash flows can be managed. That is, many of the corporates currently they are doing. This is a purely accounts payable management, which was never there in many of the corporates. Secondly, to get the financing like corporate like Reliance, we don't have any major issues, of course, because if I see the current credit growth by the banking sector, 90% steady growth in banking sector is only to the top rated companies, because of the NPA issues, they are not giving any monies to the low rated companies. So we don't have much issues getting bank finances, so that really don't matter for us. But yes, we have gone to a new kind of financing, which we are bringing strategic investor to our companies, like selling our stake 2%, 3%, 10%, 5%. That way we have bring around 1 lakh crores of investment in our Geo Platform Limited, which is a holding company of Geo. Similarly, we have gone for the right issue. So we have done world's biggest right issue during this pandemic, 84,000 crores we have taken from the public during this season. So many of the companies now, they are thinking of alternate financing rather than depending on the banks. Many companies now thinking of bringing strategic investors to the company, so that at least the company's long-term strategy can be met. Other than that, is the technological upgradation. So since most of the employees are working from home now, what we have done basically, we have upgraded our technology to ensure that our employees are working from home and they are working and their productivity is also high. In this scenario, particularly when a person is working from home, his morale will be low. So we need to ensure that this person, the morale is high and he is engaged. It's very important that a person is engaged and he is working 8 to 10 hours in a day during this pandemic situation, sitting at home for a continuous 3 months. So in this scenario, we are very frequently having a meeting with our team, through a team meeting, Microsoft team. We discuss with them the issues, we discuss with them the cash flow issues, we have every weekly review. So those kind of things now is happening across the organization to ensure that employees are engaged. Third thing, and the most important thing, we want to tell our employees in our companies at least that you never to be worried because of this pandemic. The situation definitely is going to improve. So that is how we are motivating our employees for this situation. And as far as the marketing part is concerned, so most of our marketing has gone now digital. So like in Reliance Retail, we have done for JioSmart. We are delivering the product at home now. So most of even in our insurance business also, we have gone digital. We have asked our people to talk to our customers over phone. We have given them the links to do the insurance by just doing a scanning the code and paying the premium. So those kind of innovations we have brought to the customers, so that our business also will grow and will not lose any customers. The third and most important thing, retaining the customer. Retaining the customer is most important aspect in our business, particularly in the insurance business. So if I have seen continuously from April, May, I am continuously monitoring the scenario. In fact, in April, we have 50% down in our business. May, we have picked up. June, we have picked up mostly to our last year level because of the digitization of the marketing. So now coming to the financing part, as I told you, the finance are very dynamic now. The scenario-based analysis is being done. There is no fixed planning. All 5 years, 6 years, 3 years plans are done by us now. We are not aiming at any long-term investment, although we have some plans in hand. But at this moment, none of the corporates are looking at very long-term planning or capital investments at this moment. It is basically what is happening is the working capital financing now. How to do the working capital financing to stay afloat. That is one of the major concern or major position for any of the corporate now. Although governments have come out with many measures, including 20 lakhs crores of package, that in fact is not sufficient, or it has not touched the industry so far. Although it is mostly for MSME sectors, because MSME sector is it is worst hit in this scenario because they are not getting the financing. Most of the NBFCs have stopped financing. Even Bajaj Finance, they have told we are not taking any new customers now. So in this scenario, the packages what government has given now, in fact, it is, I don't think it's just enough for the corporates to stabilize their business. It is a basically deferred credit what they have given rather than a real financing. And as you know, we have a panelist from stock market. Stock market is also bleeding in this scenario. There is no nothing positive in this scenario. There are a lot of bad news. In fact, many of the countries in Europe have gone for recession. Germany have gone for recession. Our countries' credit ratings by Moody's to a negative outlook. And they consider to bring jump rate for the country, but somehow they are given one notch ahead of the jump, which is negative outlook. So in this scenario, it will be really going to be a difficult scenario, and we don't know when this scenario is going to improve. We have that absolute uncertainty in this market now. Nobody is talking about when the situation is going to improve. USA is in very bad shape, who is basically one of the market leader. Europe is in the verge of recession. So in my personal view, this is going to exist till December. We need to see, because in India also the cases are now rising. Although we have eased out the lockdown, there are many states that have eased out the lockdown, but actually the shops are not opening or the cases are increasing. So many states they have gone again to the lockdown mode now because the cases are increasing. In this scenario, at this moment, it is very, it is essential for any companies just to stay afloat and see swim, just swim, don't go for any new ventures. If you can do some kind of strategic financing, the way we have done, like we bring some new investors, or you go for some equity issues, the right issues, those kind of things, or if you can arrange some bank financing. But the most important challenge for any corporates now to increase the top line, and that will increase the bottom line. So if that doesn't happen, then every companies are in deep soup. So that is in fact is a major challenge for any corporate. Financing has become now a day-to-day affairs rather than a monthly or yearly affairs. Every day monitoring is happening. Every day the payment shortfall is going to the outside or is being scrutinized by 3 to 4 persons in any companies now. So that is the scenario in the corporate sector now. Yes, definitely the business has gone up. It is picked up. It is not like the scenario what we have in April or May. In June, definitely the business is picking up slowly, and I hope it will pick up in June, July, August going forward. But yes, the situation definitely is going to be there for until December. We'll have this scenario of not getting the financing or anything like that. So we'll have to live with this kind of scenario for at least 7 to 8 months till we come to a full-fledged conclusion when the business is picked up. So that is from my side today. Actually, I've just gone through just for the academic purpose, this 20 lakh crores investment where the government has given the planning. 75% has been for the liquidity of MSME. Basically, most of this 20 lakh crore package has gone into the liquidity issues rather than real financing. So here also we require some kind of government measures to boost the economy in the real terms, which we feel that at this moment it is not there.
Thank you, sir.
With this, I think I have come to the end of my discussion. Thank you very much. Thanks a lot.
Thank you. Thank you so much, sir, for enlightening us about how all the plannings of corporates have actually gone for toss and what kind of nightmare holding a chief executive position in a large corporate house you are, going through. So you have not only highlighted the issues, but you have also given some of the very good measures, like strategic financing, finding alternative way of financing, technological advancement, and digitalization. But sir, my favorite part was when, being in the topmost position, you acknowledge the problems of bottom line people by saying to be empathic towards the employee. Thank you, sir. We need more leaders like you in the country to overcome these difficult situations. So thank you, sir.
Yeah, thank you.
My next question is for Sri Rajiv Shekhar Sahu. Sir, you have long years of experience in association with banking sector, not only as a financial consultant, but also as statutory auditor and decision maker. Sir, in your opinion, what are the strategic issues that commercial banks in India are presently facing during this pandemic situation?
Good morning to all of you, esteemed panelists, my very good friend, Professor Marana, always smiling, cool, but most effective. Whether there is COVID-19 or no COVID-19, he is so stable that you cannot make out, and a true professor. The other panelist, Mr. Sanbugam, Mr. Thomas Matthew, Mr. Salil Misra, and of course Neha, who is moderating the session. Thanks to Birla Global University and Professor Marana for inviting me. And among the galaxy of speakers, I don't know where do I fit in and whether I'll be able to do justice or not. But let me tell you, it's both a privilege and real difficult situation to be going through the COVID-19 situation. Opportunity in the sense that we all can say that we faced the COVID-19. Probably those who expired before March 20, they have no this, they don't have this opportunity to tell. Those who are very young, they may not be able to even experience it. And this has happened probably in never in the known history, a situation like this. Maybe people little earlier to us have witnessed World War I, World War II, but none of them might have seen what damage a small virus can do to the entire world, be it Donald Trump, be it any state leader. They are all under turmoil and having very difficult time to save their country and the people. India is no exception. Whatever one can say, whatever one can articulate, but the situation today in this country is absolutely precarious. And as Professor Marana has already said, the official number of people who have lost job, 120 million, which is of course the number of many countries, and most of the European countries, a group of European countries.
Not audible?
Yes, sir. I think sir might have some technical issue, network problem, sir.
Okay.
Rajiv sir?
Yeah, Rajiv sir. Because all the other panelists are very much there with us, so I think he has some technical issue.
Yeah, ma'am, I'm able to hear you, but I'm not able to hear South sir.
Yeah, I think Sahu sir has got
Can
some
you hear me?
technical network issues, sir.
No. Yeah.
Sir, so can we,
Rajesh?
sir, can we, my colleagues, they are trying to contact Rajiv sir. Sir, can we move on to the next panelist if it is okay? We'll take the.
No, wait for some time.
Okay, sir.
I think he's trying to correct.
Yeah. He's there, sir. Rajiv sir, are you able to hear us?
Yes,
Sir?
now just now I could hear you.
Yeah,
Okay,
But
yeah,
sir.
are you
it's
able
okay.
to hear me?
Yes, sir.
Yeah,
Yes,
yeah,
sir.
sir.
Now we are able to hear you, sir.
Okay. Okay. We have to live with this also, along with COVID-19, the poor
Of course,
connectivity
of
also.
course, sir. Of course.
Yeah. So the situation in the country is quite grim, and we have to be optimistic to overcome this. That is the only way we can pass through this difficult time. And as each corporate must be experiencing that it's so difficult to overcome the crisis. And also the major problem today is the disrupted demand, the disrupted supply, into neither top line nor bottom line. And the outcome is the loss of employment to millions and millions. Forget about the migrant labor issue, which is itself a big topic which need a big seminar or webinar for discussion. Coming to the Indian banking scenario, I think for the last 8 years or so, I would say from 2012, uh, we have been constantly witnessing quarter to quarter result of the banks becoming bad to worse. And when we were in the board, each time the managing director or CMD used to tell the worst is over, but without knowing that the next quarter was much worse than the previous one. And also that the each time you find one or couple of big corporates, falling like a soldier losing their life in the battle, it is the corporates who are becoming NPAs, and each quarter was a firefighting situation for the people in the top position. And the only thing was, those who are retiring, they were very happy. They said we don't have to face the next quarter, because for us no NPA. Once retired, we get the benefit and look for some other employment which will be useful for us. And when there was a time when the net NPA of some of the banks were zero. I still remember Oriental Bank of Commerce. The one Mr. Narang was the CMD, and the position was that the net NPA of the banks were 0%. That is after taking care of the provision. The gross NPA and the provision netting up the net NPA used to be zero. And from that situation, we moved to a situation of 10% NPA, the gross NPA reaching a stage of 10%. And then any of the big corporates, leave aside the Reliance, the Adanis, and you leave aside the big ones, most of the small, medium-sized corporates, you find either they are struggling to be out of NPA or they have already been declared NPA. And then come the SMA1, SMA2, and all categories of formulas that RBI started doing. And banking sector was never unknown to the NPAs, but they were certainly unknown to the size of the NPAs that we witnessed between 2012 and till today, which the banks are struggling. And what that resulted in, I must tell you, it is not only the NPAs, it is the manner in which the NPAs were dealt, and the bankers who dealt those NPAs, the way they were tortured. The outcome was that subsequent to that period, now anybody you ask that I have the best company, kindly lend. He says, can you give me 5 reasons why I should not lend? And this has resulted in a situation that banks are sitting with tons of money, but they don't want to lend because they say please lend, next time I want to see. But if I lend, then I don't know what is my fate and what will be my fate post retirement. I'll be hauled up in the middle by various agencies, and that is a very grim situation. Forget about the COVID-19 situation also in the moderate to moderate corporates were not able to access funds. They were able to access funds, not getting what they actually require. Because and there are so many stipulations and conditions which were only you have no lending, small lending, lending with conditions, what will be the situation?
Some problem the micro.
Yeah.
Yes, sir.
We are unable to hear him.
Yeah. Sir is speaking, but we are not able to hear him.
Situation became I can sum it up. It was not enough considering the damage caused, and also the considering, and RBI thought probably deferment or giving moratorium was sufficient for the corporates, and now it is high time that these corporates, having suffered practically closure or operating far many of the Indian companies have high leverage, highly leverage, penalized with slight shock and jolt. But many of the companies in the Indian system will have to depend, worry for their own failure. As you all know, the MSME, the out to
ଆମେ କିଛି କରିପାରିବାନି ତାଙ୍କର ପ୍ରୋବ୍ଲେମ ଅଛି ସାର୍
ସେ କଣ କରିବା ତାଙ୍କ ଅନ୍ୟ ଯୋଉ ପଡେଇବା କହିଦେବି
Sir, I'm sorry for the technological glitch that we have. We are facing in order to connect to. We are not able to connect to Mr. Rajiv Shekhar Sahu. We are trying to get in touch with him and see through the problem that we are having.
To be relooked once again, and just before I conclude, I tell the level or the panelists knowing the subject, the financial literate and must go deeper into the culture of every individual in this country, especially those who deal with the I think with the constraint of time, I must conclude without touching privatization of bank. Thank you, Professor Marana, once again. Thanks, Neha.
Thank you. Thank you.
Thank you, sir.
This,
Very correctly said by you. The world, finance is a world in itself. Professor Maharana, my faculty, he always says that finance is a world in itself. And you have also correctly mentioned that how a crisis that started as a medical crisis in one country has now turned into global economic crisis. Banks in our country were already dealing with NPA and other issues of low net interest margin, etc. But presently, the challenges that we have with the banking sector is facing because of pandemic is will take long hours of deliberation, I'm very sure. And I'm really very sorry that time and again, because of technological glitch, this is also one of the major issues that the entire world is facing due to current pandemic situation, the technological glitch, the problem where we are not able to connect with each other, completely depending ourselves on technology. Thank you, sir, once again. Now I will move on to our next panelist, Sri Thomas Matthew. Sir, as a financial planner and an active investor in stock market and mutual fund, can you please throw some light about the various issues that are connected with the present investment in stock market as well as in mutual fund as an investor and also as an academician?
Okay, thank you, Neha. And thank you, Professor Marana. And thanks to Birla Global University for inviting me. And the other panelists also have highlighted all the problems. But this is a pandemic which has affected each and every person in the world. And the worst affected people, financially at least, are the business class of people and those employees who have lost a job. And this crisis is such a deep crisis. No, we have never faced such a crisis post the World War II. Such a crisis has never been faced. And in India, you will find that we also have been very badly affected. The major luxury products, the goods and services, has been very badly affected. Tourism, it has been very badly affected. The airline industry has been very badly affected. The real estate is also sitting on a huge stockpile of inventory. Unless and until they take a drastic step to reduce prices and start selling, real estate is also going to be a major problem. Prior to that, we had major crisis in the stock market also, like Yes Bank. It was a very well-run company, but it came almost on the verge of closure, and the government has to intervene to take it out of on the verge of closure. And even a very strong mutual fund like Franklin Templeton, it was forced to close down 6 of its debt funds, which is rather unheard of. I've never heard of something like this in my past about 30 years of professional life, that a mutual fund is planning to close down its operations in debt fund and all. And the crisis is such a deep crisis. It's such a deep crisis, even the government will be having a tough time solving it. We need a lot of amount of packages to be infused. The 20 lakh crores that the government has infused is not good enough, because if you seriously analyze that package, it is hardly consisting of about 2 to 3 lakh crores. The rest of it is actually government is standing a guarantee for the loans that has been taken by the corporate world, which is not exactly a package. Around 6 lakh crores, which say that the RBI is infused, is actually a bond which RBI has bond. It's not a package. So the real package is working out to be only about 2 to 3 lakh crores. So the economy or the business class, the package that they were expecting is not enough. If you seriously analyze the package that has come for the economy or for the business class is a little bit in PF. A part of the PF which the employer was supposed to pay, that is being paid by the government. In many of the foreign countries, what the government is doing is they are paying a part of the salary of the employees. A substantial part of the salary of the employees are paid by the government on one condition, that retrenchment does not happen. So unless and until the burden of salary, the burden of interest, the burden of rentals are being taken care of, may not be completely, but in part by the government, the business will be having a very tough time. We are having a large number of MSME organizations who would have a tough time staying afloat unless and until a package comes in. So if you talk about the Atmanirbhar Bharat Abhiyan, which the government has come out, and they boast that it is 20 lakh crores. So hardly anything has come to the economy or to the business class. Unless and until a substantial amount of money comes into the business class, you will find the economy will not turn around. Recently, there was an interview of State Bank of India's chairman. He's stating that the banks are sitting on huge amount of funds, but they are not able to lend it because they are not finding suitable people to whom they can lend. At the same time, we are having a large number of businessmen who are in dire need of money, but at the same time, banks are not willing to lend to them because the financial situation is not good. Say a businessman who is in a bad financial situation is the person who needs the fund the most, but they would be the person who would be denied at the first instance. We had Mr. Mishra talking about Reliance able to get money because they have the profit and they have already cash rich and they are able to get the funds. But think of all those MSME who are in a bad situation, they need funds, banks are not ready to finance them at all. So a government interference in this kind of a thing has to come. Now what the government is doing is basically standing as a guarantor for these MSME enterprises, which may not be enough because the banks would be having a final call whether they should finance them or not. Even the mutual fund industry also, government is giving a special liquidity facility to the mutual fund to the tune of about 60,000 crores. But beyond that, there is not much in it. There are two things which are very badly affecting the capital market. One is the tax on dividends, which is absolutely illogical on the part of the government to tax the dividend because the profit of a corporate is already taxed, and what amount is remaining after taxation is the amount which is being distributed to the investors. And if the government wants tax on that also, which is absolutely illogical. And the next aspect which is very relevant for the capital market is the tax on long-term capital gains. When STT was introduced, so at that time the government had made it very clear that if STT is being introduced in lieu of long-term capital gains, so long-term capital gains will be exempted, but the investors will have to pay a STT. So today a situation is that the investors have to pay STT also, and in addition to they have to pay a long-term capital gain also. So these two issues has to be looked in by the government. When these two issues are looked into, so the capital market is going to be a healthy place to invest in. Because now we are having a situation, what are the options which are available to a small investors to invest here? So one is the banks, but the rate of interest are dropping drastically, and the rates have come to a level where it becomes unviable for an investor to invest their money in the banks because it will be just taking care of the inflation needs. Then real estate scenario is also very bad. The property prices are also at quite a high level, and the property prices is not crashed. So because of which the investment in properties are also not viable. The next opportunity which is available to the investors are the gold, but you will find that gold prices are also at an all-time high. So capital market is a place where a lot of opportunity is there, where investors will be able to invest their money, but the government needs to tackle two things. One is they have to look into the financial need of the corporate world and some kind of package for them which will actually benefit them. Today, it's more of a lip service that the government is doing for the business people. A real hardcore package, like a part of the employee cost, a part of the interest cost, should be borne by the government. So otherwise, it's going to be a tough thing. But Once again, I'm going to emphasize on the 2 points that government needs to really emphasize on is to make a dividend tax free. That is very important because it's illogical for the government to tax dividend when already the corporates have paid tax on the profit, and on the balance when they're distributing among the shareholders, they want to tax it again, which is not right. The next is the long-term capital gains needs to be scrapped because the government had promised earlier also that long-term STT would be introduced in lieu of long-term capital gains, which they have not done. So in spite of all these problems that we are having, there is a huge amount of opportunities also that lie ahead for us. For example, now funds are coming cheap, interest rates have come down, so business opportunities, if there are, then government or you will find that investors will go ahead with it. And the next aspect is the China has lost its credibility. China is supposed to be the biggest manufacturing center in the world, and they have lost their credibility in the world. So India has got a very good opportunity in that you will find a large number of corporates, they might start shifting the base to India. And if this happens, Indian manufacturing sector will boom up. And we need to encash onto the low oil prices that is dominating the world. Because of lower consumption of oil, we had the oil prices which had come down. Now it has stabilized a little bit, but there was a time when oil prices had come negative also for a very short period of time. So we should encash onto that and ensure that the business development happens, because once the business development happens, you will find that all other aspects will automatically be taken care of. Jobs will be created, government revenues will also be coming. So I was really surprised to see that government's income tax collection, as per the latest figure, on the basis of the advanced taxes, the total amount as per the last year, it has come down by about 76%. When you have a situation where the government does not have the funds, then how will they give the packages? So we need to have a situation where the capital market boom takes place. That will happen when economy also revives. Then everything will set in place. So for the investor also, capital market will become a big opportunity where they can park their funds and get good revenue out of it. Thank you.
Thank you, sir. Indeed, you have dissected the government launched package for us in the beginning, and then you took us to how dividend taxes on dividend and STT is actually affecting the capital market investments and various opportunities that are presently available for the small investors and opportunities that lies ahead of this pandemic. Thank you so much, sir.
Thank you, Meenam.
The next we have is Dr. Shanmugam with us, but sir, I would like to take your kind permission as Mr. Shri Salil Mishra will be leaving due to some of his commitment, and following your this we have question and answer session, and we have one question from the participants for Salil sir. Sir, if you can permit, I can ask one question to Mr. Shri Salil Mishra before he leaves the webinar.
Yeah, sure.
Yeah. Sir, we have a question from Rashmi Ranjan Pani, and he's saying that, is after this pandemic situation, will corporates be measuring their growth only through cash flows? And if yes, what will be the role of, or will be some role that will be played by private equity firm and angel investors?
Frankly speaking, the growth is not measured in the, yes, cash flow is one of the measurement for the growth, but it is not the sole measurement tool for a corporate to measure the growth. So the growth can come through many sources. Even the when we are selling it to we are giving credits. So that is also a part of our growth. Our turnover is increasing. But as far as the private equity and the investors are concerned, so when they will come to a company, they will see first the cash flows, whether they will be adequately get the return from this company or not. So for example, if the Facebook is coming to our company, so we must be having some committed growth to them. Otherwise, no investor will come to a company unless you show a positive cash flow. So cash flow is one of the vital resource or vital point for any investor or PE funds to come into a company. So that is absolutely essential, cash flow, because you need to have a positive cash flow to run your business. But it may not be only the sole criteria that yes, the company doesn't have a cash flow. That doesn't mean that company is not growing. So the company may be managing. The company may be managing through the various modes of financing, directly arranging through a supplier's credit finance, buyer's credit finance, or PSFCs. Many kinds of finances are available. So it may not come to the company directly, but the vendors is also get paid. But definitely at the end of the day, every investor, they look at the positive cash flow of the company, because ultimately the returns count.
Thank you. Thank you, sir.
Thank you.
Thank you, sir, for joining us. And I know you have some prior commitment, but thank you for sparing some time for us despite your busy schedule, and for enlightening us with all your practical insights and knowledge. Thank you.
Thank you very much. It's my pleasure. Yeah, thanks.
Now we have the fortune to have with us Dr. Shanmugam, and sir has been really very kind to bear with us for so long. Thank you so much, sir. Sir, you have headed the headed the Research and Index Administration Division of MCX, the largest commodity exchange of the country, and you are also a banking risk practitioner, certified by International Certification on Banking Risk and Regulation. So if you could please share with us, our participants, the major strategic issues that are presently connected with the financial risk management aspect of the financial sector. So
It's not audible.
Kindly unmute yourself, sir.
Is it? Am I audible now?
Yes, sir.
Yeah.
Yes, sir.
Okay. Sorry. Thank you, madam, for kindly coordinating this meeting and making it possible for me to this one. And thank you to Professor Morana for his kind invitation to me, and also Birla Global University for this opportunity that you provided actually. And good morning, the August panelists over here, and also the audience actually. And ma'am, I mean, to put the question forward actually. So oftentimes, when we speak about the crisis or the markets in the crisis, actually, the crisis had impacted either the fundraising practices. Crisis had impacted the prices of the stocks and things like that actually. So if we look back in 2008 or 2000 .com bubble, these were crises where in 2018 the retail the home loan market almost gone down actually. So it's one part of the entire financial market, but the size was so high and the impact was very high. The impact came in from the financial markets. This time is different, as it was indicated by the other panelists actually. If we can, we can put together the economy into three sectors, which is the primary sector, the secondary sector, and the tertiary sector. The primary sector is the agriculture, the forestry, the horticulture, and then the mining sector actually. So that's the sector where human resource is very important actually, and that's a sector actually which feeds into the secondary and the tertiary sector actually. So without the functioning of the primary sector, it will not be possible for us basically to see the development of the or the functioning of the secondary sector or the development or the growth of the tertiary sector actually. So so each of these are dependent on each of their own, and to that extent it is essential that we have to have human resource healthy enough basically to start functioning. But this time with this pandemic, we had to basically lock ourselves into a into a room or into our house, and so that like we are better protected and things like that. So when we talk about running factories and running mines and things like that, we need people to basically be there in the facility, so that they will be able to so they will be able to contribute to the the production activities which are happening over there. So it's actually the human resource which is impacted the most, and hence the impact has been much severe if you look into the markets and the response of the markets actually. So first of all, let me tell you the US markets, which is the the highly followed market actually, and as was also told by Mr. Mishra, Mr. Matthew, Sri Sahu, the US market had like gone down like 30 to 35% immediately post the this one, and this was also on the back of the job loss to the extent of about 39 million, which is one of the most transparent markets with respect to data. The US job losses was reported about 39 million, and that too, if you compare that with the 2008 crisis and 2000 crisis, it was nowhere comparable, which was between 8 to 12 or 12 million is the maximum peak of unemployment that was seen in those crises actually. So it was an unprecedented crisis, and because it is on human resources, and naturally the economy is going to take a downturn actually. So I was just comparing the growth projections by OECD, growth projections by World Bank, and things like that actually, and I had posted it on the net actually. So one of my friend asked, hey, I mean, all the major countries are showing up to be negative on on the growth side, India being on the most pessimistic side, which is by OECD on -7% growth, and US being -10% or 11% growth actually. But World Bank is slightly optimistic, but it still puts India's growth at -4 to -5% actually. So that's the kind of growth scenario that is also emerging because of the major hindrance to the human resource and the functioning of the entire economy and things like that actually. So he was just asking like, which is the one economy which is in the growth side? I mean, I can see all the major economies are on the negative side as per the estimates are. It's only Chinese economy, and that too 1% growth is the estimate that I could see. And 1% growth is on a $14 trillion economy, which is like 7 to 8% of the total global GDP size, can do nothing to prevent us falling into a negative growth rate. But both World Bank and OECD has been pretty confident that they'll be coming. The nations will be bouncing back to the positive side. It may be because of the negativity at this point in time. The positive growth will come next year, and plus the demand and the market disruptions may go off actually. So that's another expectation that is coming up actually. So in terms of the stock market, as it was rightly told by Professor Morana and Mr. Matthew, the volatility levels have been very high actually. So the volatility levels have been very high, and as Professor Morana had rightly indicated, it's a challenge for the investors actually. So whether to go into this market at this point in time to invest in or not actually. So that's one point, as far as the stock markets are concerned actually. And if you look into the sector wise, the breakup of the stock markets, I had shared the presentation, Professor Joshi. I mean, if you can share it with the participants, it would be great actually. So it's the top sectors, the top 6 sectors which are impacted the most is basically the airlines, the metals, the automobile, the transport, the hospitality, and the real estate and tourism sector. So that's the most impacted sector as far as the Indian markets are concerned. And Mr. Matthew had rightly explained why they have come down and things like that actually. And let's come to the currencies. Currencies is like are from the start of the crisis till May end, the graph indicates that the Indian currency is down by about 5.61, and among the major Asian currencies or the emerging market currencies, the Singapore currency is worse than Indian currency, which is 5.75, and Malaysian ringgit is down by 5.85% actually. So I mean, we are down but not out. So currency is not that very bad actually as far as this one. And central bank has rightly indicated by Mr. Sahu had taken a lot of measures to improve or prep up the economy in terms of monetary economy. Gone down on the repo rate and things like that. But if you see the yields on the government bonds, they don't seem to be responding at all. That means cost of fundraising is still not that gone down actually, either because of the high perception of the risk that people may have. So let me come to the commodities. So that's another challenge. Commodities, commodities at the national level, if you put together the supply problems were there actually because it was complete lockdown and the first lockdown and the second lockdown, and lockdown naturally reduces the demand basically because of the fear that people may have and things like that. And the third one is wastages in supply chain because they were not able to be appropriately processed at the right time and things like that. And then the inefficient logistics actually. So I have the good, I'm not able to distribute it to the people. So that's again another big this one. So that's basically for the national commodities. On the international commodities, because these are international commodities and priced in dollars and pounds and things like that, volatile currency rates kept the prices of commodities slightly higher, though in dollar and pound terms the prices went down a lot actually. So the volatility was a concern over there, especially for the market. Reduction in demand and certain supplies, and moreover when you talk about international commodities, the international trade has come to a standstill actually. And so rightly so, apart from gold, which was indicated by Mr. Matthew, which had a year-over-year increase of about 40%, year till date of about 17%, and year-over-year compared with this year same time and the last year same time, it had a 40% increase in the prices as far as the gold is concerned. And silver also had given a 8% and 6% interest increase in this one. And since the Chinese economy faced a huge disruption in its production and manufacturing activities, which is a major consumer of base metals, the base metals went down by 22% between January and March, but it did come back by another 10% from March onwards till May actually. But yet the situation is grim. And the agricultural commodities, the production is poised for record highs, and fortunately we are sitting on a huge pile of grains and but the only problem is the supply chain is not actually connecting the supply and the consumers actually. So that needs to be corrected, but it is getting corrected. So hopefully the price highs should come down pretty soon. The global trading in commodities have come towards standstill actually. So most of the global commodities, let's say the spices like turmeric, jeera, cardamom, and their demand is coming down actually. So that's led to lower prices of these commodities, and these prices have been phenomenally lower than what it has been in the last 1 year or so as far as the average prices are concerned actually. And unfortunately the lockdown has coincided almost with the peak Rabi arrivals actually. So that's a major this one. So as it was rightly indicated by Mr. Matthew, one big thing which was also indicated by Mr. Sahu and Professor Marana, that it's a phenomenon that we have never seen in the markets actually, which is a negative pricing conundrum, which is basically the negative pricing of crude oil. So when this negative prices happened in CME, my cousin who stays in, my brother-in-law who stays in US and called me that, hey, Shanmugam, I see that New York Times is reporting that when I go to my gas station, the gas station will give me money if I can put in gas into my car. Actually, should I go out? So I said, like, laughed out and said that, hey, no, hey, it's not actually a physical market aberration. It's basically a financial market aberration, and it's basically to say that it's a pressure on the financial markets, and that has impacted the this one. So it's a negative prices for commodities, which has not been seen, never been seen in the markets at all. Though we have seen, the prices, of the, especially the interest rates going down to the negative sides in Japan, Europe, and things like that. I'm sure, madam, just 2 minutes, I'll just close it down actually. So it's basically a problem both for the markets and the intermediaries, because their trading systems were not prepared, their risk management systems were not prepared, and things like that actually. So that led to a huge chaos in the markets and things like that. And especially when you talk about, I think it's for the researchers basically, if you go down to the the slide with negative prices and institutions, actually the option pricing model, because that's the pricing model with which people work on how to price the premiums of the options on crude oil, actually had to change from the black and the black Scholes model into Bachelier model, actually, because that's one of the model which works on commodity futures, actually. So, but yet there are questions again how much viable this model will be. Should we shift back against the to the Black-Scholes model or something which the market has not responded back at all, actually. So as far as the commodities are concerned, lower demand, inflexible supplies led to lower supplies, lower prices, higher volatility, and hence higher VAR, the value added risks, and hence higher margins in the markets. And margins went up to the extent of 25 to 40%. You won't believe that to buy 100 rupee worth of gold or 100 rupee worth of base metal, one has to keep 40 rupee worth of money in the the account free, so that like you will be allowed to take positions in the markets, actually. So that means that much of money for the corporates is kept out of the money that is available for their other activities, actually. So the corporates would have to keep more money in terms of margin, which actually adds to the cost of hedging. So at this point in time, a lot of research which is emerging, which is saying that it's better that corporates remain unhedged or naked rather than remaining hedged and facing not only the financial problems associated with the margins and things like that, but also the problem of volatility and the MTM requirements that may come from here and there, actually. So these are like a few problems that has come in. Rightly so, the policy makers have announced a lot of measures in agricultural commodity markets, because that's the only market which is under the control, because other commodities are like we are dependent on largely on the the international scenario, and hence we don't have any control except for the currency linkage, actually. So that's about the commodity markets. So to tell you in short about the volatility, the higher margins has kept or has thrown away risk management as a practice in the corporates into despair, actually. So it's not only Indian markets where the risk management is not that very not that very deep into their budgets and things like that, but also even in the Western markets, companies are de-risking and coming out of the de-hedging and coming out of the market, and remaining naked and things like that, actually. So it's just a very challenging situation, and hopefully we will be able to come out of this challenging situation pretty soon, actually. Thanks a lot for this opportunity.
Okay. Thank you, sir. It is indeed a challenging situation, but all of you have given us a lot of opportunities. And what I'm always amazed by your presentation is, sir, you have that knack for research, and you don't, fail to encourage all the researchers by highlighting the potential area of researches that we have amongst all the, by
Madam, one point I know it will be useful for the researchers, both who have joined us and those from the Birla Global University. The SEBI, the Securities Exchange Board of India, took this as an opportunity basically to understand from the independent researchers, actually, not from their own research and things like that. So what is the impact the COVID-19 has created on commodity markets, on debt markets, on interest rates and currency markets and stock markets and things like that, actually. And it is invited proposals, and that the window is going to be on for the next 1 year, actually. And those who would like to do some useful research, they can submit this to SEBI, and then the invitation is on the website, madam. Yeah.
Okay. Thank you so much, sir. We have a lot of scholars who have actually joined us as a participant for this webinar, and I'm really sure that they will be taking this opportunity. Thank you, sir, for highlighting, all the, you have actually summarized the entire, webinar by taking all the sectors into consideration. Thank you, sir. Now we'll quickly move on to question and answer session. And Rajiv sir, do I have you with me? I just I'll just ask one of my colleagues to call Rajiv sir. We have a couple of questions from for Rajiv sir. But I will move on to the two other panelists that we have, Mr. Thomas. The question is that with the collapse of six income funds like Franklin Templeton,
I'll
it has
just
shaken
get
the
back.
confidence of investors. What is your assessment? They want some more detailed assessment about this particular development.
This is something I'm also seeing for the first time. A mutual fund, they are closing down their debt fund. The situation was that the bonds which were issued by the corporate world, so the corporate itself was in a position that they had lost their credibility in the market. So the prices of the bonds started going down a lot. So when it started going down, so that is the time when the investors also wanted to redeem their fund. So when the redemption starts, so at that time the mutual fund will be in no position other than to sell the existing bonds that they are having. So that will set in a cascading effect. The prices will fall further, and when you are having bulk sales, so there won't be any buyers at all. So imagine a situation: a bond price is, let us take 1,000 rupees, and it is going at a discount of, let us take 10% because the company's health is not so good. It is, let us take 900 rupees, and let us take about 25% of the investors wants their money back. So when the mutual fund tries to sell it at 900 rupees, you will not find any buyers at all. There will be very small quantity of buyers. And when they want to sell the entire stock, then you will find that they won't get maybe about 100 rupees also for the bond which face value is 1,000 rupees. So in that situation, the mutual fund is completely stuck down. So the only way for them is to wait for the maturity and ensure that the company pays back the money when the maturity comes in. So the only way that the mutual fund could do that was to stop the fund itself. So it's not that the investors have lost their money. It is just that the redemption of that bond has been stopped for the time being. And as and when the company's bonds mature, the mutual fund will be able to get their money back from the company. And once they get back the money, then they would be able to give it back to the investors. So as of now, the investors need not be very worried because they will most probably they will get their money back. But of course, the risk factor is there. We don't know how COVID is going to affect the company in future. So many good companies also they were unable to sell their bonds in the market because the liquidity crisis was there in the market.
Okay, thank you, sir. Rajiv sir, do I have you with us now? Sir,
Again, repeat.
are you able
Again,
to hear
repeat.
me? Sir?
You can go to Professor Dr. Sanmugam.
Okay. Sir, we have a question coming in that they want to know do investors possess now a huge risk investing in banking sector, keeping COVID-19 into consideration?
I think I will leave it to Mr. Thomas, who's a investment and advisory expert actually. Yeah. So, but connecting it to Mr. Thomas's and this one, but I
I'll
didn't
take that
see.
question.
Yes.
Sir,
Is
and
it audible?
so sorry to interrupt. We are running short of time, so if you can just summarize it within a couple of minutes, it would be really
Yeah, sure.
great.
I'll take a couple of minutes. See, actually, what happened is today the liquidity crisis is there. Definitely, it is there. But it's not that the banks are having a major problem because wherever they have lent, in most of the cases, their funds are relatively safe, unless and until the crisis worsens and big corporates like Reliance and Tata Steel and all they fail, which I feel it is not going to happen. So you will find a lot of situations where the MSMEs would be failing, but banks have got enough of provisioning to take care of that if a few MSME fails. Among the big corporates, the chances of them failing is very less, even if the crisis goes worse from that situation. So that is why investment in the bank, even if you're buying the shares of a bank, would not be a major threat at all, unless and until you distribute all your money in one bank and you are really unlucky and that bank fails. Like we had a situation where Yes Bank was almost on the verge of closure. That is primarily because of their internal issues, that they had lent their money too much to people who were not in a good financial positions at all. So when a bank do not take prudent steps in financing, like it has been generally seen that a person who's financially is not in a good situation, he tends to offer a higher rate of interest, and a company which is financially strong tends to offer a lower rate of interest for the funds that they take. So, as a prudent banker, you should strike a balance between the two. Try to see the risk also at the same time you see the returns also. A balance has to be stuck. So only if the bank do not take that prudent view and lend it to companies just because the rate of returns are higher, and you lend it to those companies who are not in a position to repay back, then only the crisis will be there. But then that crisis is going to be limited to a particular company only. It's not going to spread to the entire banking sector. So as an investor, you don't need to fear at all by investing in the banking sector. And
Okay.
if you're putting
Thank you.
your money, if you're putting the money by way of fixed deposit, I think you don't have to worry at all. The
Okay.
Indian financial market and the banking system is very, very secure. This is one thing
Thank
I can assure the investors. Thank you.
Thank you, sir. Sir, Rajiv, sir, do we have you with us now? Are you able to hear me? There are a couple of questions that are directly been asked to Rajiv, sir, but I think again we are not able to connect to him. So we'll move to Dr. Shanmugam, sir. This question is directly to you. Anirban Vishwas, he asked that Mr. Shanmugam, Indian
I
GDP.
think Mr. Sahu is there online actually, so he's able
Sir,
to
are you
hear
able to
you.
hear me? Sir?
Yes.
Yes, sir.
Hello.
Yes, sir. Are you able to hear me?
Yeah, I'm able to hear you. Please tell me.
Yeah, sir, there is a question that has been asked by one of our participants, and they want to know that why nationalized banks like SBI and PNB have more NPA as compared to private banks like HDFC. They have stated the fact that HDFC in its fourth quarter has shown the NPA as for of 4K crores, which is too small when compared to other nationalized banks.
Okay, I think whatever I could make out from the question, 25% of the question, but I can make out why HDFC Bank NPA is low and why PNB NPA is high,
And
or
State
why
Bank
nationalized bank NPAs are high and why private bank, good private bank NPAs are low. See,
yes,
basically, which PNB works and the principle with which HDFC Bank. HDFC, their principles are more prudent than what PNB has been doing in the past. PNB was lending more aggressively to sectors which were prone to risk. And if you see banks who lend in power sector, road sector, they all landed themselves into problem. Calibrate what was being discussed about the cost of funds to them and the cost of lending to the leave aside the issue of influence in the public sector. The understanding of banking by private banks and especially HDFC Bank is definitely superior to. Second is that I have always said and businessman. 50% he cannot be a full businessman. He is an employee of the bank, but he must understand business as much as a that the business is facing. I'm sorry to say, many of the bankers who have moved from rural agricultural lending to credit appraisal, they have either gone by the hard style of appraisal, carrying whatever has been said, and they have, for example, if they want to go for power sector, they have gone by the power purchase agreement, they have gone by the rate in the
I think now, yeah, finish.
I'm sorry that we again have some technical problem with Rajiv sir.
Okay, yeah, continue.
Sir, I would like to take up the last. Sir is, I mean, Rajiv sir is speaking, but we are not able to get connected to him. Sir, should we take up one last question for Dr. Shanmugam?
Yeah.
Yeah, you can take.
Yeah, sir, the question is that Indian GDP is mainly dependent on service sector, but now do you think, seeing the present crisis, that we need to give more emphasis on manufacturing sector and commodity area of the economy?
So as the economy grows, if you look at the developing economies and the developed economies, naturally they have gone through the path of first the growth of the primary sector, the secondary sector, which is the manufacturing, and the tertiary sector, which is the services sector, actually. Obviously, we need to have a well-developed manufacturing sector, basically because, it employs, the most available population on a more productive manner through the SMEs and MSMEs and things like that, actually. So it's necessary that, given that we have a huge population and we need to provide employment opportunities over to them, and we need to, produce, goods which are actually done by the MSMEs in a more competitive manner and things like that. So we need to have a very resilient manufacturing sector, and also we need to have a very resilient primary sector, so that, like, it actually supports the growth of the the secondary sector, actually. So nowhere else the economies have graduated straight away into the tertiary or the services sector. It goes on on a gradual basis, and in order for us to move towards a strong services sector, we need to have a strong manufacturing and the primary sector as well, actually. Thank you.
Thank you, sir. I think this question was more related to being Atmanirbhar on part of the country, to manufacture more and then go for the service simultaneously. As it is rightly said that time and tide waits for none, and this session is of no exception. Due to paucity of time, we are unable to take up all the questions that have been asked by all our participants, but we'll be replying to all of them, all answered by our panelists very shortly. Moving towards the end, I would request our Honorable Dean, Professor Maharana, to give his closing remark and a very, very brief summary of today's constructive discussion, sir. We are already, way ahead of the time. So, if you, sir.
Yeah, thank you, Neha. There is no need to summarize whatever our panelists have said. These are all self-explanatory. I think they have explained everything in a very, very simple way. I have only one comment, that COVID-19 will disappear. It is not going to stay for all time to come. But the impact it has left on different segment of the financial sector, they are continue to be there for a long, long time to come. It will be a lesson for the nations how to manage their economy, how to manage their financial system during a crisis phase. I think it is just only not a crisis, it has given us a lot of opportunities. And it is for us to learn what are the causes of the crisis and how we can exploit or convert the crisis into an opportunity. We have discussed briefly about different segments of the financial system, but finance, as I told you in the beginning, is a wall in itself. And I'll be happy and this session will be productive if our participants, who include the faculty and the students, they have learned something really meaningful out of this deliberation which you have made in this particular webinar. Thank you very much.
Thank you, sir. It is indeed that we will be getting lot of opportunity from this the present issues that we are facing. With this, we come to an end of our today's webinar. I hope you all must have been truly benefited by today's discussion. I would like to thank all our panelists, Sri Salil Mishra, who was there with us and had to leave early because of his some prior commitments. Sri Rajiv Shekhar Sahu, who was there with us despite of all the technical problems and network issues that we had. Sri Thomas Matthew and Dr. V. Shanmugam for giving us time from your busy schedule and of an opportunity for all of us to learn from your such insightful knowledge of your experience. Thank you, all the panelists.
Thank you, madam. Thank you, Professor.
Thank you.
Thank you.
My sincere thanks also goes to the chair of the webinar, our Dean, Professor Dr. Samson Maharana, for his never-ending support, and always, sir, for enlightening us with your pool of expertise. My heartfelt thanks goes to my colleagues, Professor Lopamudra Nayak, Dr. B.P. Vijay Shankar, and Dr. Hemant Banawat for all their support and cooperation. My deep sense of gratitude goes to the authority of Birla Global University for giving us this platform for such discussion and deliberations, and IT cell of BGU led by Mr. K.M. Pandey for all his technical expertise. At the end, I would like to thank all my participants for their active participations. I would request you all to kindly respond to our feedback mail that will follow the webinar. Thank you all and have a great day ahead. Thank you.
Thank you.
Thank you, Professor. Thank you, Professor.
Thank you, everybody.
Thank you.
Thank you, sir. Thank you.